Welcome to today's Canary Report, where markets sit in cautious equilibrium as investors digest a mixed bag of tech-specific fears and softer-than-expected economic data. The Nasdaq is the only major index in the red, at nearly 1% down, while gold jumps more than $1.50 per ounce, a sign that capital rotation is underway, but without full-blown panic mode. Let's see what our canaries are telling us about where smart money is positioning next. Speculative sentiment has turned distinctly cautious as the RK, SPHB, MAGS, and XBI basket shows a clear divergence, while biotech, XBI, roared up nearly 3% on what appears to be selective positioning around healthcare innovation. The rest of the speculative complex drifted lower. The Mag 7 losing $2, $3 trillion in value over a single month, has clearly rattled speculative capital, as investors rotate away from concentrated tech bets that have already reaped massive gains. This isn't a full retreat into cash, just enough prudence to suggest greed is cooling and selective risk-taking is replacing broad beta enthusiasm. Credit markets are quietly stable with minimal movement across high HYG and HYGW, a classic sign of institutional calm rather than stress. The yield spread compression we saw earlier in the week has held firm, suggesting that while investors are rethinking tech exposure, they aren't worried about broader default risk or liquidity issues. Credit is behaving as a background character here, providing stability even as equity markets deal with more dramatic headlines around AI valuations and Fed policy expectations. Volatility has noticeably cooled, and UVXY both shed over 2%, while the VIX itself dropped to 1650, its lowest level in weeks. This tells us fear isn't rising, it's actually dissipating as investors process that the worst of the Mag 7 sell-off may be priced in. The VXX futures contract also gave background, confirming that volatility positioning is unwinding rather than building. Investors aren't panicking. They're recalibrating with measured caution after a turbulent month of AI-driven valuation restructurings. The real economy engine shows clear signs of selective weakness. SMH, Semiconductors, fell nearly 5% on what looks like sector-specific overhangs, while IWM and KRE both slipped modestly. The BLS jobs report showing only plus 57k versus half the expected 100k plus is a quiet but meaningful headwind that's keeping capital from flowing into broader economic plays. Meanwhile, XLP, consumer staples, gained nearly 2%, suggesting defensive positioning within the real economy itself rather than an outright retreat. The engine isn't sputtering. It's just running more efficiently on less fuel right now. Gold is the star performer here, surging 1.3% to $4,135 as investors hedge against the same tech-specific overhangs that are hitting equities. TLT remains essentially flat at 0.06%, indicating bond markets aren't seeing a flight to safety panic, just measured positioning. XLP's 1.97% gain aligns with what we've seen throughout the week, capital rotation into defensive sectors rather than broad safe haven mania. The safety trade isn't dramatic, it's surgical, targeting exactly where investors believe uncertainty will persist longest. Today's market tells a coherent story. Tech-specific fears from AI valuation concerns and Fed policy ambiguity have triggered selective rotation without broader panic. The Mag 7's $2, $3 trillion monthly loss is the headline driver, while softer-than-expected jobs data provides a gentle economic backdrop. VIX, cooling alongside gold strength, suggests investors are comfortable but not complacent. They're rotating capital carefully rather than fleeing markets entirely. The real economy engine continues to run, just with more selective fuel consumption as capital finds its next efficient allocation point. That's your Canary Report for today. Tech-specific overhangs driving rotation into defensive positioning, while volatility eases and credit holds steady. Keep watching the Mag 7 valuation story unfold That's likely to be the primary catalyst determining whether this is a measured correction or something deeper. Stay vigilant, stay informed, and we'll see you tomorrow.